Welcome to this week's U.S. economic forecast for the week of September 9 to 13, 2024. 1. Inflation data, CPI. A key indicator, the Consumer Price Index CPI, for August will be released on September 12, 2024. This data is crucial as it will guide the next steps of the Federal Reserve's monetary policy. Current estimates suggest annual CPI growth will range between 3.5% to 3.7% compared to the same period last year. If CPI exceeds expectations, the Fed may continue raising interest rates, which could put downward pressure on gold and other safe haven assets. Conversely, if CPI comes in lower, markets may anticipate a slowdown in the Fed's tightening cycle. 2. Consumer spending and the labor market. Consumer spending reports for August will provide another key insight into the health of the U.S. economy, since consumer activity is a major contributor to U.S. GDP. Metrics like retail sales and consumer confidence will be closely watched. The labor market also appears to be cooling, with only 99,000 jobs created in August below expectations. This slowdown could raise concerns at the Fed about the impact of aggressive rate hikes on economic growth. 3. Bond yields and the U.S. dollar. The 10-year Treasury yield is currently at a high of 4.3%, putting pressure on non-yielding assets like gold. Next week, bond yields could adjust if there are signs of the Fed easing its interest rate hikes. Meanwhile, the dollar index DXY is holding strong around 105.00, indicating the U.S. dollar's strength against other currencies. If bond yields continue to rise, the dollar is likely to remain robust, which could hurt U.S. exports and reduce domestic purchasing power. 4. The Fed's next move. Next week, the market will be closely monitoring Fed officials' statements on monetary policy. Any hints of a softer stance on rate hikes could provide support for the stock market and ease pressure on assets like gold. Overall outlook: U.S. GDP growth in Q3 is projected to remain steady at 2.1%, a stable but moderate pace. However, with a weakening labor market and persistent inflation, the U.S. economy may face the risk of slowing down if the Fed continues its tight monetary policy. The CPI data will be the key driver of financial market trends next week. If inflation comes in higher than expected, bond yields and the dollar could climb, putting further pressure on assets like gold.